Good evening, everyone. Dwayne here, CFRN. Happy Sunday. Hope you guys have all had a great Sunday with church or family. However your day's gone, I hope it's been well. Tonight, we really are going to be brief. I'll be here only as long as you have questions. I know that a lot of the Q&A sessions in the past, because I have such a passion for teaching and training, they've gone 2 and 3. I think one even went 3.5 hours, but tonight we're gonna put our blinders on because I still have to do the weekly trading zones and I still have to do concierge trade alerts. And so I don't want to tie you up and keep you from your family. Just want to answer your questions. And so what I need you to do is I need you to put your questions in the chat box, okay? In fact, I need somebody to give me a Y in the chat box so that I know you actually can hear me before we continue. Okay. We got a Y. Thank you very much, Alex and Scott. Ben, thank you guys. Okay, so you can hear me. Let's take just a quick peek here at what happened on Friday. Okay, Friday the 24th, the market closed at 2078.75. 2078.75. Friday close. So you can see now it's been a very quiet Globex open here in the S&P. We'll take a quick peek at some of the other markets. Friday close 2078.75, and then the Globex open tonight was 2078.25. 2078.25. Okay, you can see on the screen, I'll scroll it back in just a second. Sunday night Globex open. Okay. Two-point difference. No big deal. Let's see if there's any volume to speak of so far. No, not really. We had in the first hour 6,000 contracts, which isn't too bad. Let's go back and see what last Sunday had. Last Sunday, the opening hour, right there, only had 2,000. Okay. So we have more volume on the opening hour tonight, but not much in the way of price movement. Now, if we were to go back the 3 weeks prior to this, the Sunday night Globex open was incredibly volatile. We had these huge gap lower opens based off of the Greek tragedy that has been unfolding. Hopefully they've worked out a solution. I mean, the obvious real solution is that they have to stop spending more than they take in. That's the only way to patch that hole in the boat. So you and I know that we can't spend more than we earn for very long, or we'll end up in trouble. And the same is true with countries, sovereign nations. I mean, just doesn't work. It's bad math, bad science. So here's what happened. Last Sunday night, we opened right at a weekly trading zone. We did a leg and a retrace, hit the zone overhead. Price, when it hits a weekly trading zone, will always try to go to the zone above or the zone below. That's just what price does, okay? We have 5.5 years of weekly trading zone charts that you can look at, and you'll see the process repeated again and again and again. So this move, this initial move from zone to zone, remember we had a leg and a retrace and a leg. That's how markets work. From 2118 to 2125, that's 7 points. Okay, 7 points. That's a nice way to start the week. Turn right around. Price tried to then come back to the zone below. Couldn't quite make it. Put in a swing low at 2119 and a quarter. However, that's almost 6 points. Okay, see, it came within a few ticks of hitting the zone. And so if you had 7 up and 6 down, let's say you only caught 5 of the up and 5 down, that's 10 points. We teach you how to make 2 points a day. On a 5-day week, what's that? It's 10 points, right? So we're going to teach you this week in the live trading room how to make $100 per contract per day. That's our goal. Now you may go, well, that's cute, but I can't live off $100 a day. If you're in the US or the UK, you're absolutely right. We do have partners in certain areas of the world where $100 a day allows you to live like a king or a queen, but most of our students, 80%, are in the US or the UK, and so of course you need more money. The way we handle that is we first prove our profitability, our consistent profitability in the simulator. We do that by earning $100 a day, 10 days in a row, in 10 trades or less. Once you do that, now the blueprint, our 24/20 blueprint, will give you the green light to go live with one contract. You'll stay with that one contract. You'll make $100 a day gross until you've increased your account balance by $2,000. This prevents you from having to blow up your account. You've probably heard, if you've been around trading any length of time, well, you're not really a trader unless you've blown up at least a couple of accounts. Well, they used to say that too, because I had blown up a few accounts and it just made me feel better to be able to say that. But with what we've put together and what we offer at CFRN, you really don't have to blow up an account. In fact, if you follow the rules and if you stick to the blueprint, you'd actually have to work pretty hard to blow up your account. Certainly not impossible, but it's going to take some time. Because what happens is you give me 10 days of consistent profitability. You go live with one contract. You increase your account balance by $2,000. You add a second contract. Now we're at $200 a day. After a period of weeks, we'll add a third contract. That puts you at $300 a day. That's gross before your commissions, right? Anytime you hit a rough patch, anytime that you're not able to meet your daily goal in 10 trades or less, 2 days in a row, the blueprint will put you back in the simulator. We'll have a private mentoring session, either you and I or you and Michael, and we'll try to help you figure out what happened. Maybe it's just a rough patch. Maybe there's more to it. Maybe you learned the rule set real well in the beginning and you sort of started to drift and veer off course. And pretty soon you're out in the wilderness and it's like, where'd my edge go? Okay, so we'll gently help you get back onto the road, spend a couple days in sim. My new co-host on the radio show, Jim, if you have not listened to last Wednesday's radio show, part 2, I highly recommend it. He comes on about 45 minutes into part 2 of last Wednesday's show. Jim's a retired homicide detective, bounty hunter, had a very colorful life. Now he's a successful CFRN partner. He's worked his way up the ladder, up the blueprint to 6 contracts. But week before last, he had a rough couple days. And so he did what we teach. He put himself back in sim. Michael got together with him. They sorted a few things out. He traded in some a couple days, regained his confidence, hit his stride, and then stepped right back out with 6 contracts and had a fantastic day. Okay? So you'll have rough days in the beginning, you'll have rough days in the middle, and you'll have rough days at the top. Define rough. Well, rough is any day that you're not able to make your daily goal in 10 trades or less. Okay? This is a business of probabilities. We take all emotion out. If you learn to trade with us, it will be the most boring job you've ever had in your life. I promise you. In the beginning, you'll have the jitters and the butterflies, but we'll teach you to make the butterflies fly in formation. And before you know it, it'll be boring. But boring is good, okay? We can get our adrenaline rushes by, skydiving or doing some other extreme sport. We come to the market for daily income, okay? That's what we believe in, making money daily. We teach you how to do this step by step. We've tried to simplify trading as best we possibly can. Michael and I have been trading together since 2006. We put together some pretty complicated stuff there for a while. In the beginning, our screens had so much stuff you could barely see price. And that wasn't working out so well. And so we retooled and we started to take things down that we had coded ourselves, created ourselves, even things we had bought, and we just started throwing away all the clutter. And we ended up with a methodology that embraces the underlying rhythm of the market. Any market, every market. You can trade the S&P, Dow, Russell, NASDAQ, live cattle, soybeans, cotton, whatever you want to trade. The only thing you change is the symbol. You use the same indicators, same trade setup on every market. Some people will tell you, well, different markets have different personalities, so you got to learn to trade crude like this, and you got to learn to trade the S&P like that. Well, I beg to differ. There is a method. We have that method that will allow you to trade whatever market you want to trade. In the live trading room, you're going to see Michael trade 6 different markets during the 2 hours. That's going to make your head spin like Linda Blair, okay? So just relax. We don't expect you to trade 6 markets at one time. We're not going to ask you to. We're not going to teach you to. You will, during your free trial, you'll pick a market or two that you have some attraction to. Maybe you've traded it in the past, or it's just the market you want to learn to trade. And on your screen, that will be the charts that you're watching. As Michael jumps from market to market to market, I want you to think of it as just one generic market. Whether he's in the Russell or in natural gas or gold or crude, it doesn't matter what the symbol is, because he'll be using the same indicators and the same trade setup every time, no matter what market he's in. So I want to tell you to relax, okay? Because it's going to seem hectic. Everybody goes, man, my head was spinning. I just didn't know what was going on. Here's what's going to be going on. Michael's going to be trading with a lot of confidence, moving from market to market. You just pretend it's all the same market, because each time he brings up a chart, he'll walk you through the setups. Once he gets his points for the day in the morning, he'll then walk you through the setup, okay? He'll show you, he'll give you a handout that there's only going to be 2 trade setups that we use in the live trading room. So for 2 hours a day, watch him, okay? And then you have the other 22 hours in the day to go and practice what you just learned. Watch and learn for 2 hours. Go practice for 22, as many hours as you have time for, okay? And as you're out there trading and kind of stumbling around and kind of can't remember everything, write down your questions. The following morning, we'll answer those questions for you as we're trading live markets. Tomorrow afternoon, Bert and I will have a technical analysis class open to you on divergence. Divergence is a part of our trading. However, we use it very differently than you've probably seen it used in the past. So that will be a good class tomorrow afternoon. Tuesday afternoon, Michael will hold a class for everyone on the trial that gets into some of the other trade setups that we have and that we teach our partners, sort of a peek behind the curtain. We've been doing the same 2 trade setups in the live trading room for 2.5 years. On our website, cfrn.net, if you look on the upper right, it says live trading room results. If you click there, you can actually download a spreadsheet that walks you through and tells you every trade we've taken for the past 2.5 years in the live trading room, what our results were. We had some bad days. Not a lot, but the truth about trading is there'll be rough days. The biggest mistake new traders make, or traders who've been at this a while attempting to achieve consistent profitability, is we're all looking for the way to not get stopped out. We'll spend time and treasure untold to figure out a way not to get stopped out. If there's any secret to the markets, this is it. There's no way to not get stopped out. Okay? The sooner you accept that you are going to get stopped out, do we want to minimize the number of times that we get stopped out to the best of our ability? Absolutely. But can we stop it? No. It's part of trading. The best trader on the planet, on the best day of his career, will be profitable 7 out of 10 trades. Most jobs are not that forgiving. Surgeons have to get it right every time. Airplane pilots have to get it right every time. Engineers, even barbers, right? You want your barber to get it right, don't you? See, trading's a very different business. And so what's interesting is we seem to attract a lot of doctors and engineers and pilots and scientists, people who have unforgiving jobs, and we throw them into this business that says, hey, the best you're ever going to be is 7 out of 10. Now, on that lucky day, but we don't depend on luck, we teach you a skill set that you use day in and day out. In fact, that's part of the time you spend in the simulator. The reason we have you string together 10 consistently profitable days before you go live is so that you, down in your gut, know that you did not get lucky 10 days in a row. In this business, that's just not possible. Anyone can have a lucky day. You can even have a couple of lucky days. It's very rare to have a lucky week. And I'm just going to tell you that you have a better chance of winning the lottery than you do having 2 lucky weeks back to back. Before you go live, it's important to understand that this has nothing to do with luck, that this has nothing to do with gambling. This is all about probabilities. Once you understand that the outcome of every trade you take is random, all fear goes away. You simply have to take the next trade. You take as many trades as you need to take each day until you reach your goal, and that's when you stop. Okay? It's that simple. So I just don't want you to freak out tomorrow morning when you see all those charts up there and you're like, man, all these buzzwords like BBC and CFMA1 and cycle, I don't know what that means. Don't worry, we're going to teach you. Now, about day 2 or day 3, into your free trial, what I want to do is I want to have a personal mentoring session with you. We'll work it out to accommodate your schedule and my schedule. So that's why I say the second day, third day, whatever works for both of us. We'll spend 30 to 60 minutes in a private go-to meeting. You won't have to type in a text box to chat with me. You'll be able to just speak right into your headset or your telephone, and I will help clear up anything about the methodology that you don't yet understand. There's 5 points, every trade starts with a cross. I'm not going to go too deep into that. Just want to prepare you for tomorrow. Now let me see what questions are in here and I'll get them answered. Time used on charts and candles. Ben, we use a range chart, and I'll show you exactly what that looks like. Okay, this is the euro. Let's go to the euro right now tonight. Every candle is exactly 4 ticks tall. I'm going to open this up so you can see it better. There we go. Okay. Each candle exactly 4 ticks tall, so it's not tied to time in any way. It's not tied to transactions. It's not tied to volume. It's tied entirely to price movement. Okay? There's only 2 indicators. This down here is called the slingshot. This is called the CFRN. It's got 2 components, the BBC and the CFMA1. Don't let those names confuse you. I'll tell you what's happening right now. Now we just opened the euro chart. We have a short trade setting up. Here's how it's going to play out, if it plays out. Okay. There, let me get it. There we go, nice and big. Now, how long does it take to form a 4-tick range candle? That's a great question. People always ask that. It could take 4 seconds, 4 minutes, 4 hours, or 4 days. Price will move 4 ticks, and on that 5th tick, boom, new candle. Okay. In the morning, when Wall Street opens, a 4-tick range candle it'll be anywhere between 1 and 4 minutes. Now the reason we use the 4-tick range candle is we know where the next candle is going to open. Okay. Now you see the top of this candle right here is 109.79. So if every candle is 4 ticks tall, the swing low so far is 77. So the bottom of this candle, if it doesn't go any higher, the bottom of this candle is going to be 75. We know that ahead of time. Now, if this were a trigger candle, since we already know the high is 79, and if price goes no higher, the close will be 75. If we want to be short this market, we can use our DOM and we can have an order in to sell on a stop at 974. That's the reason for the range candle. However, on this trade setup, what we need to happen is we already had our bearish cross. You'll learn what that means. Price has pulled away. Now we need to see price pull back and hold, and then we want to see a down close or a red candle. As it climbs up, the candles will be green. But when it gets here, we want to see it stop. Then we want to see a red close. And then we'll buy the open or sell the open of the next candle. That's why we use. Now we never risk more than 8 ticks on a trade. So that's 2 of these candles end to end. All right. Okay, next question. Yearly 34,000 plus. What does this mean? What did the account start with and when did it start? Ben, it started at the beginning. I assume you're looking at the spreadsheet. Is that what you're looking at? Ben? You heard it said on the radio show. What you should do is you should go download the spreadsheet. Let me just show you how to do that real quick. That'll make it easy. Okay, go to, oh, by the way, you can subscribe. We have one of the longest running podcasts on iTunes. We have been doing a daily podcast for 10 years. Go to cfrn.net. Right here, view live trading room results. Click that. Okay. To view our daily results spreadsheet from today back to January 2nd, 2013, click here. It's going to give you an Excel spreadsheet. It'll show you how many trades we took each day in the live trading room, what the outcome of each trade was. It's very granular. It gives you all the detail. We trade one contract in the live trading room because we're teaching you to go live with one contract. If we're in there training you with 3 or 5 or 10, then that's what you'll attempt to go live with. And it's important that you only go live with one, because you're going to use the profits you earn from the one contract to add your second and then your third, and you'll work your way up. Okay? To view a trade-by-trade analysis of every trade taken each day, visit our radio archives by clicking here. We do a 2-hour radio show every day, Monday through Friday. We're now in our second decade of broadcast. Our station streams 24/7, but for the live financial part, tune in at 12 noon Eastern. In fact, tomorrow morning in the live trading room, Michael will give you the link to go and not only listen to the radio show, but you'll be able to see our charts as he goes through and does a blow-by-blow, trade-by-trade, bar-by-bar analysis of every trade that we took in the live trading room that day. Okay? So again, from the home page, you just click View Live Trading Room Results, and there you are. Okay. Also from the home page, if you have not actually signed up for the trial yet, name, email, don't need your mother's maiden name, street you grew up on, just hit register. Now there is a page with a little more information if you need it. cfrn.net/apply. Okay. If it turns out you're already on the list and it's been more than 6 months since you took your trial, or there's some extenuating circumstances, email me support@cfrn.net and I'll see what I can do to get you in. Okay. All right. Next question. Ben, we have a 90-day mentoring program. If you're on the trial, you've probably gotten a couple of emails already. You'll get an email that outlines the different options that we have available for the mentoring program, the 90-day mentoring program, for the concierge trade alerts. All that information will be made available to you. You'll probably get an email, if not tonight, you'll get one tomorrow morning that shows you all the options that are available. However, no matter how attractive it may seem, we don't want anyone signing up until you've completed your 5-day free trial. You have a chance to use the platform, the indicators, and our methodology. You have a chance to prove to yourself that you can be profitable before you spend any money. I'm going to say that again. We allow you to use our chart, our data, our indicators, and our methodology so that you can prove to yourself that this works for you before you pay for anything. We also give you an hour of personal mentoring during the week. All you have to do is email me and say, hey, I've got Wednesday afternoon free, Thursday afternoon free. What time can we get together? And I'll do my very best to accommodate your schedule. Okay. We stay pretty busy. We have a lot of partners. We have senior partners. We have partners in training. But if you're on a trial, we want to have a little bit of one-on-one time with you just to make sure you understand everything. Can you trade stocks in spot Forex, Alex? No. The platform that we use, DT Pro, only does futures and options. Now, NinjaTrader, we support Ninja. So if you take the trial and choose not to use the DT Pro platform, the one that I have up right now, if you want to use Ninja, you need to send me your machine ID. Once you've signed up for the trial, you send me your machine ID. I enable the indicators for you for a week. And with Ninja, I believe you can pull in data for stocks. You can pull in data for spot Forex. Will it work in those markets? Well, the answer ultimately is yes. However, what we're going to teach and what you're going to see us trade will be futures. Can you take what you learn in futures and apply it to other markets? The answer, of course, to that is yes. Okay. Guys, that looks like all the questions. So we start tomorrow morning at 9:30 a.m. sharp. Some of you have heard about our concierge trade alerts. That's where we send you out 8 markets. I send out an email every night, 8 markets, 2 trades per market. In most cases, each one of those markets will trigger multiple times during the day. Give you just a peek at what that looks like. Here was the euro on Friday. The trade alert I sent out Thursday night said to consider being short below 109.70. Dropped 32 ticks, and the euro pays 12.50 per tick. 32 times 12.50. It's about it is $400 per contract. Bonds, we had a great week in bonds, long above 152.25, long above 153.21. Friday, not so spectacular. Bonds had a tough go of it. Okay, there was actually enough movement to get your points for the day, but it wasn't the $1,000 days that we saw earlier in the week. Crude oil, on Friday, we said to consider being short below 48.50, and we put in a swing low down at 48.06. So that would be 44 ticks at $10 per tick, so that's $440 per contract. If you're trading our 2420 blueprint, you don't need 44 ticks, you only need 10 ticks. 10 ticks is your $100 per contract per day. That's what we're going to teach you how to do, like a machine, to make $100 a day. And then once you've increased your account balance to $2 grand, you'll add your second contract. After a period of weeks comes number 3. The goal is at the end of 24 months to get you to 20 contracts. You still only need to make 10 ticks a day. For us, the answer is not more points, but more contracts. What's important, though, is that those additional contracts are underwritten by profits you earned in the market. As long as your additional contracts are underwritten by profits you earned in the market, you don't blow up your account. You don't go in debt. You don't have to borrow money from anybody. Now, trading is risky. You can lose all of your money and then some. That's why we're so strict with our rules. That's why we don't even allow you to go live. Well, let's face it, we can't stop you from doing anything, but if you are going to follow the rules, we don't allow you to go live until you've strung together 10 consecutively profitable days where you made $100 a day in 10 trades or less. Okay? So, yes, this is a big move. We have a managed futures program where there's a larger than 8 tick risk. that allows you to participate in these types of gains. So if that's of more interest to you than actually learning how to trade yourself, send me an email, support@cfrn.net. We'll send you some information on the managed futures. You know, not a bad idea to learn or to have both. Number one, be able to trade your own account, but then at the same time, have a professional trading these numbers on your behalf. On the S&P, on Friday, let me just show you exactly what the alert looked like that went out on Thursday. This was Thursday's alert. It said to be short the S&P below 2097, right there. See that? Okay, it went out. The alerts went out at 7:45 p.m. Eastern on Thursday. So 2097, that was the line in the sand right here. Now the S&P pays $50 per point. There's 4 ticks to a point. $12.50 per tick, $50 per point. And so let's see how much we dropped. Swing low Friday was 2069.75. So let's just call it 69. Well, from 69 to 99, that would be 30. So this is about a 28-point drop. Now, would I expect you now, and you can see there was very little drawdown on the trade once it triggered. Would I expect you to get out at the swing low, 2069.75? Absolutely not. We teach you to trail your stop, and so at some point when price comes back, as it does with the S&P particularly, it channels back and forth and back and forth, you're going to get stopped out with profit. That's a good thing. Okay, so there was the S&P. Soybeans, one of our best markets, really is. The word on soybeans Friday was ZSX5, short below 975. Okay, we hit a low of 963. So that's about 12 cents in soybeans at $50 per penny. Beans and the S&P are similar in that it's $12.50 per tick in each market. There's 4 ticks and a penny with the beans, and there's 4 ticks and a point with the S&P. Now, we also have a theory. It's not a theory. It's something that happens. Important prices in important areas are almost always tested. Okay? Price broke through. It dropped from 975 down to a swing low of 972.50. Okay? 975, 972.50. That's 2.5 cents. So that's your whole day. You're done. Okay? You don't need to take another trade. You've made your daily goal. But what did price do? It came back. It tested that important price, important area, and it dropped again. Nice, right? What did it give you this time? A whole lot more than just your daily goal. Well, then it comes back yet again. And it only has to go above the trigger line by 1 tick. That resets the trade, and you get to short it all over again. But if you're trading the 2420 blueprint, if you're looking to build your account from ground zero to 20 contracts in 24 months, you're going to take your $100 per contract per day, and that's where you stop. This teaches you discipline. You may have read a book called Market Wizards. Some very smart people, very good traders who made enormous sums of money and lost it all. Why? Because with all the talent, they lacked discipline. Some of them made it back and lost it again. Some of them made it back and kept it. Some of them never made it back. Okay? What's the point of having a great week, a great month, or even a great year if, due to a lack of self-discipline, the market takes it back? This is why we keep you on a very short leash, and you're chomping at the bit. I want to add more contracts. Well, just be patient. When your account balance says it's time, or the calendar says it's time, we'll add another contract. So as your account grows, you mature as a trader. Now again, we're very strict on our rule set because trading is risky, because you really can lose all of your money and then some. And on top of that, and this is the part that really stings, trading is just not suitable for all people. You have to have a certain temperament. And that's part of what the free trial is about, to allow you to kind of get a feeling for whether or not you have that kind of temperament. Can you be patient and wait, act? Wait, act. Some can, some can't. Okay? The good news is at no charge you get to find out for an entire week. Okay? Hands-on training in live markets with 2 afternoon classes and 1 personal mentoring session. Okay? All right, the Dow did a beautiful job. The concierge trade alert that we sent out Thursday night said to get short below 17,670. We had a start here that gave us almost our entire daily goal. The second time around, it gave us our goal and then some. Now, the Dow only pays $5 a point, so you actually need 20 points in the Dow. The Russell pays $100 a point. Now, the S&P only pays $50 a point. The Russell pays 100. So let's look at what happened Friday. Okay, the first trigger off of 1243, we only need to get down to 1242, which the low of this candle right here is 1242. That's your daily goal. You're done. But then price comes back to test the important price, important area, triggers again, and this thing drops all the way to 1221. So that's basically, let's see, 31, 41, 22 points. That's a $2,200 per contract move. Would I expect you to get all of that if you have grown beyond this and are now looking for these larger gains? No, because you're going to trail your stop. You know, unless you're psychic, and I'm not, you don't know where the exact low tick is going to be. So we teach you to trail, and at some point along the way, you get stopped out with profit, and that's a good thing. Gold. The alert was to be short 1088. We got it in the first hour, far exceeded what we needed. The alert was 1088. We needed 1087. We got that like that. And then the thing dropped all the way down to 1072. And then ran the other way. But we were done early with gold. And that takes care of the markets that we trade. We trade the S&P. We trade soybeans, we trade the euro, we trade crude, the Dow, the Russell. I showed you bonds, did I not? ZB, yeah, I showed you the bonds. So 1, 2, 3, 4, 5, 6, 7. I feel like I'm missing one market. There's 8 markets. S&P, Dow, Russell, gold, crude, soybeans, bonds. Well, here's the list. S&P, Dow, Russell, gold, crude, euro, then gold, then bonds, then soybeans. So yeah, 1, 2, 3, 4, 5, 6, 7, 8. All right, so there we go. Any other questions? How do I find the machine ID? Russell, I'll tell you what. I'll show you. Let me fire up my Ninja. I use DT Pro myself, but I have Ninja on my computer because I have to be able to enable your machine ID. But I'll show you where to find it as soon as mine opens. Here we come. Come on. There we go. Go to Help. Go to About. And right here, now, it's not the license ID, it's the machine ID right there. Okay? So once again, you simply go to Help, About, Machine ID. Okay? So once you're signed up for the trial, once you've got your confirmation email back, it's very important that you click the confirmation link. Otherwise, we don't know you've signed up for the trial. So within a pretty short period of time, you should get a confirmation email from us. It gives you the link and the password to the live trading room this week. It gives you some basic information. Then you'll get a second email that has a couple videos to watch to get you ready for the trading room in the morning. Okay, and at any time that there's any hitch in the giddy up, just email us, support@cfrn.net, and Michael or I will respond right away and help you with whatever it is that you need. Let's see. Is 20 contracts a reality with volume? I watched one of your interviews with Jim. It's actually, his name's Jim Cox, the retired homicide detective, but we call him White Bar Jim. Just being funny, we told him, said, that's your Indian name, John, White Bar Jim, because he took one of our indicators that we don't use in the live trading room, but as a partner, you have access to it. In fact, on the free trial, you have access to our trend change indicator. I used to use it every morning on the radio show to show the dominant trend in the market. So Jim one day took it and blew the dust off of it and put it to work on the 4-tick range chart and developed his own little trade setup around that, and it's become quite popular. A lot of the partners trade that now. In answer to your question on volume, that's a very good question. Let me show you what the reality is. Okay. Now, we're on a Sunday night. It's quiet. But let's go even down to, let's go to midnight, right? Okay, here's midnight on the 21st. In this hour, 873 contracts were traded. In the next hour, there was 3,000 contracts traded. 3,700. 13,000. Now, once we get into the day session, 186,000 contracts, 182,000 contracts, 190,000. Okay. We had a slow open the first hour tonight. But what did we do? Again, we already talked about it. We did. Okay, the closing hour on Friday was 105,000 contracts. Oh no, the closing few minutes was 1,900. And then tonight, we opened up with 6,000 in the first hour. And this hour, we've got 3,000 so far. Okay, so the S&P round-the-clock volume liquidity, no problem. It will swallow up 20 contracts like nobody's business. The euro, okay, let's put some volume on there. The London Open is some of the best trading you'll ever find. 3 a.m. Eastern. For you guys on the West Coast, that's 12 p.m. West Coast time, 3 a.m. Eastern. We are opening a London live trading room to complement our Wall Street live trading room, okay? So let's start at midnight and work our way through. Find 20 right there. There's midnight. Yeah. So midnight, there was 1,000 contracts in that hour. In the 1 a.m. hour, there was 950 contracts. 2 a.m., 8,000. Here we go, 3 a.m. This is the London Open. 19,000 contracts. 10,000. 5,000. Okay, so that's the euro. Let's go to bonds. Okay, let's throw some volume on the bonds. Okay, wee hours of the morning, 721, 1,800, 3,400. That's the London Open right there, 3,400. And then as you get into the day session, it's huge, 37,000 in an hour. Crude oil, you'll find more of the same volume. Okay, let's go to midnight. Midnight, where are you? Here's midnight, right? Oh. Close enough. What do we got? 1,300, 869, 721, 1,000. Now here's the London Open, 3 a.m. Eastern, 3,300 contracts, 3,100, 4,500. The Russell, you cannot trade it. Well, I don't want to say you can't trade it, but the volume in the Russell, until the day session opens, I don't advise it at all. It's just too thin. Okay. See, here we are there's midnight on the Russell. We have 17 contracts, 59, 101. London Open, 800. Okay. So yeah, in that hour, you could have done okay. Now, once the day session opens, then you're fine. 12,000, 13,000, 8,000, 19,000. The Dow, same thing. In the middle of the night, not a lot of volume. Okay. Once the day session opens, you're okay. Midnight, 139 contracts, 451, 697. And on the London Open, you actually got 1,300, but then it stays real quiet until Wall Street opens. And now you got 15,000, 19,000. So it depends upon the market you want to trade. In the London live trading room, when we open it, we're going to be focusing on the euro, crude, gold, the euro, and and the S&P. Okay, because the S&P is just around the clock. There's always somebody willing to take the other side of your trade in the S&P. The weekly trading zones, I'll close with this and answer any final questions. These go out to the partners before the markets open Monday morning, okay? 6:15 a.m. Eastern. Now, once we send out the zones for the week, we don't change them, manipulate them, massage them. They're carved in stone all week. It gives our traders a real solid backdrop against which to trade, because price is always going to do this. It's going to go from zone to zone to zone to zone. Won't always go in a straight line. Get a leg and a retrace and a little double bottom here, deeper retracement, but ultimately it gives you the leg. Now on Friday, we traded below the zone at 77.78, but quite interesting that on the close Friday, 2078.75, 3 ticks above the weekly trading zone. If you Google CFRN weekly trading zones, you'll find a lot of articles I've written about the zones. But up at the top of the Google search page, you'll see images. If you click that, not every image that loads is ours, but you'll quickly recognize what our charts look like, and they go back 5.5 years. Lots and lots of charts, and price just does the same thing week after week after week after week. Okay, I mean, each week is unique. I mean, it's not the exact footprint, right? Same movement. By the way, nothing we do is associated in any way with market profile. We don't use anyone else's methodology. Everything that we do is uniquely our own. You know, it may be simple, it may be humble, but it works real well for us and for an awful lot of partners around the world. Friday, we also hit our big bean number, which means I'll be putting out a new big bean number tonight. Now, we had a potential low of 973 and a high of 1028, and on Friday, the sell-off in beans, as you can see, we not only hit our low, but we traded through it. And so tonight, when the email goes out with the concierge trade alerts, there will be the new big bean numbers. Okay. All right, guys. Is there any final questions? Alex, why don't you give it a try? Okay. In fact, I'd love to get together with you in a mentoring session, Alex C. And I would like to see you load some stocks once I enable the indicators in your platform, because I used to trade equities. Okay. I traded them fundamentally on a whisper. It was when I came to futures that I saw, for me at least, the answer was in technical trading, not in fundamentals. So if you want to get a hold of me this week and say, hey, Dwayne, I've got my Ninja platform running with your indicators, I would love to come in there and take a look at some stocks with you. Okay. Also, guys, one last thing. Let me show you this. Okay, we were looking at the 4-tick range chart in the euro, and there's not a lot happening right now. Markets are very quiet. Okay. Some people say, hey, you know what? I want to be a swing trader. You know, I'm not comfortable with scalping. Scalping has a negative connotation for some folks. Well, you know, it's only until you've tried to be a swing trader that scalping doesn't look so bad. So, but each person, you know, finds what works best for them. So this is the 4-tick range chart on the euro. Now I'm going to change it to an hourly. That looks pretty bizarre. Let's straighten it out. Here's our methodology. Okay. Bullish cross, price pulls away, price pulls back to physically touch. Away we go. Okay. Price pulls back to physically touch, and away we go. Now, let me go out to a day. Bullish cross, price pulls away. We have a momentum trade set up here, and we have a momentum trade set up here. That's the second trade. I tell you, we use 2 trade setups in the live trading room. We have more setups that we teach you once you become a partner, but in the trading room, you'll see us use that pullback trade I just showed you, and we have the momentum trades, okay? And this is on a daily. Bullish cross, price pulls away, price pulls back, up close, by the open of the next candle, boom. Bearish cross, price pulls away, price pulls back, down close, sell the open of the next candle, and you'd be in this trade for about 3 days, okay? When you change the time, the indicators don't change, the rules don't change. So you can be the trader you want to be. If you want to be the swing trader, the daily trader, you want to go weekly, you can do whatever you want. The markets are fractal in nature. And so, in fact, just to show you how fractal they can be, let me put this on the ES, the S&P, okay? And I'm going to get away from time completely. I'm going to go to volume. $10,000. So what this means now is every time 10,000 contracts exchange hands, we get a new candle. It's not tied to time. It's not tied to price. It's not tied to the number of transactions. This is purely volume. Okay. We had obviously a bearish cross up here, right here. Price pulls away, price pulls back, down close, sell the open of the next candle, and away you go. Price pulls back to physically touch, down close, sell the open of the next candle. Bullish cross, price pulls away, price pulls back. We need an up close here, okay? This is where we close. This is where we open tonight. This is still the opening candle. See how the red candle is the 20, no, actually that one was tonight. Okay, the green candle was Friday. This red candle was tonight. So price has pulled back to physically touch the BBC, but now what we need is an up close. In other words, we need this candle to close green, and when that happens, we'll buy the open of the next candle, okay? That same recipe is what we apply to every market, every time frame. That's why we say trading's not easy, but it can be simple. Michael and I have labored together since 2006, 9+ years, to make trading simple. It's not easy, never will be easy, but it can be simple. Can you sign up for the concierge trade alert service separately? Yes, Tony, you can. So volume is not his problem. Is it the broker or platform? Wayne, I'm not sure I understand. Help me out. I want to give you a good answer to your question. I'm just not sure what the question is. Mike says, looking at the ES, would you expect to bounce up from here? You know what? Looking at the hourly, the fact that we moved higher on Friday, pulled back. Now, these are last week's zones, but the zones have what I call a carryover effect. In other words, these zones are still good to trade off of tonight. It very much looks like we're going to get a move higher from here, okay? Yeah, let's open it up and I'll show you. Now I can see what I'm doing. I'll just draw that all over again. Okay, so from the swing low Friday to this swing high right here, okay, we've done a 38% retracement. We missed it by a tick, right? So where would I look to go long? Since you guys came out to visit tonight, I'll leave you with this. And I think I see one more question in there. I'll get that. Consider being long above 2081. 78, 79, 80, 81. Yeah. Okay, I'll leave you guys with that. Consider being long above 2081. Now, how far is that trade good for? What kind of a target could you expect? Well, let's do this. Let's go from the high to the low. There's some pretty clear sailing to 2082.74. Okay, that's 1 3/4 points. You really want to take 2 points out of the market. You could go long at 2080, all right? But this swing high could cause you some trouble, right? So you have an option. You could be long 2080 to 2082. That gets you out before you run into an obstacle, all right? I think this market has the potential to bounce up to at least the 50% retracement, okay? I don't get into forecasting or prophesying. I trade what's in front of me. So let's go look at the ES. On the 4-tick range, if this candle closes up, I'm sorry, this is on the 10,000 contract. If this candle closes up, then our system says buy the open of the next candle, okay? Now let's look at it on the 4-tick range, which is what you'll see in the morning in the live trading room. Now, this one got a little tricky. You'll learn about this week. See, price pulled away, price pulled back, but overhead we had a CFMA1 red and falling. We had a cycle red and falling. I'm not interested in that trade. The trade I want, if I'm going to go long, I have a CFMA1 blue and climbing, and I have a cycle blue and climbing. Remember, I only need to take 2 points out of the market, and I'm done for the day. So I can afford to be patient, to wait around, okay? So there's 2076. Well, almost. You get the idea. There's 2076, and the top of the box is 2078. Okay, so I created a 2-point box. So once this thing gets straightened out and is in position for me to trade, in other words, see, because we've had a little bearish cross here, I need this line to get back above the BBC, okay, bull bear cross. I need it to pull away, pull back, give me an up close, and then I just need it to run 2 points and done for the day. The indicators will always give you the exact entry price to the tick. Doesn't matter if you're in Brooklyn or Bangladesh. So in answer to the question, yes, I think the market has the potential to move higher from here, but it has some work to do before it can. It's got to break free. Going back to the weekly trading zones have like a magnetic, for lack of a better term, a magnetic attraction to them. And so I have a hard and fast rule that I always teach my guys. We won't get long until we get at least 2 points away from the zone. That's sort of the cutoff point for that magnetic attraction. Okay. Now, I would have said just consider being long above 2080, but this swing high at 79 1/4, I got to be at least 1 point higher than the most recent swing high. Why? Because I need to know that the market is trending. If I'm going to go long, I need some evidence the market is trending. If I'm going to go short, I want some evidence the market is trending. Now, what if I'm wrong? Imagine that, right? Okay. Now, one of these trades is going to produce a profitable trade. Consider being short below 2075. Well, how do I know which one? You don't. No one does, okay? No one can tell you if the next tick in the market is going to be up or down. If you've been doing technical analysis for a while, you get pretty good at guessing, but that's all it ever is a guess. Oh no, I know this guy, he does the stars, and I'm just telling you, God didn't give it to man to know the future, okay? So, the wonderful thing about what we teach is it's actually possible to make money in the market without knowing what's going to happen next. I don't know if price is going to break north or south, okay? If it breaks south, which it very well may, okay, then I'll be short from 2075 to 2073. That's my 2 points, done for the day. If it breaks north, I'll be long 2081 to 2083, done for the day, okay? So there you go. My gift to you for coming out tonight to the Q&A session. How about that? Okay, looking at, all right, my thought as you answer Alex's question regarding stocks is, why is he looking to change what CFRN is successful with? Oh, thank you, Russell. That's an interesting take. I didn't even think about that. I am here because what I've been doing is not working. My guess is he is in the same boat. I need to change my thinking, change my trading. I like you. You read my email. That's what I said. Change your thinking, change your trading, change your life. Thanks for your comment. Alex, you may take that to heart. Please don't take offense, because he did not mean it in offense. He just meant, hey, what I've been doing ain't working, so I'm here to learn something new. So let's do that. Let's learn something new. But I will spend a few minutes with you, Alex, just showing you that, yes, this could work on stocks. But see, futures, with stocks, you have to have a minimum $25,000 account balance. Maybe that's not a problem for you. Well, okay, then there you go. Futures, along with having a much smaller minimum account balance, you have incredible leverage. The S&P, you can trade the S&P for $500 per contract. That gives you control over $100,000 of equity in the S&P 500. That's 500 best-of-breed companies. For $500, you control over $100,000 in equity. Wow, that's pretty powerful. Well, yeah, but that leverage, that's a double-edged sword. It is, right? That's why we use an 8-tick hard stop on every trade. So if we take a trade, we put up 500 in margin to take the trade. The most we're going to lose on that trade is $100, unless our stop gets jumped in a fast market, which, you know, does happen sometimes. But hey, that's the truth about trading, right? And there are beneficial. Now you got to talk to your CPA, your accountant about this, but futures do get preferential tax treatment over stocks. There's a 60-40 thing, but again, I am not licensed to give you in tax advice, so talk to your CPA or a CPA who understands trading futures, okay? Even if you're only in a trade for 5 minutes, a part of that trade you pay long-term capital gains on. It's very complex, and I won't attempt to explain it. You just go read up on it. You got the internet. All the answers are there. You're welcome, Mike. Wayne, he was saying that he was having slippage and partial fills with 5 contracts, unless I misunderstood. I was just wondering if you have problems with 5 contracts, what it would be like with 29 contracts. Thanks. Okay, anytime you start trading multiple contracts, there's going to be some slippage. Even if you're in the S&P, which is the most liquid animal on the planet. Look at this, I'll show you. Okay, Now, right now, we're pretty flush on both sides. All right. But in a minute, you'll see one of these, there's right now, there's 69, 70 on the bid, 18 on the ask. There are now 21 on the ask. Okay. Now, let's say we were using your number of 29. Well, see, there's only 22 available in that position. So obviously, you're going to get slipped. It's not really slippage. It's just there's nothing there to fill you. Does that make sense? Like right now, if I try to push 40 contracts through, well, there's only 33 available at that price. So I can get 33 at this price. The balance I'm going to get at this price. Looks like I got slipped, but there wasn't inventory at that price. So now, if you're trading on a limit, you might not get filled on the balance of the order. If you're trading market if touched, you'll almost always pay one tick of slip, but the payoff is that you're guaranteed a fill on your order. And we'll go through all that stuff this week. Okay, we'll dig in deep and try to help you out with that as best we can. Alex says, I want to trade swing and scalp and learn only one technique. Well, then you've come to the right place because we can teach you that. Thank you so much, Ben. The stops for one contract, Abe, it's 8 ticks. And so on the markets that pay $12.50 a tick, like the S&P, soybeans, and the euro, you've got an 8-tick stop, $100. Okay. Now on the Russell, gold, crude, those pay $10 a tick. So on those markets, 8 ticks, it's only $80. Okay, we're always looking to make $100 on every trade we enter. But if it's the Russell, gold, crude, you're only risking $80. S&P, soybeans, euro, you're risking $100. Okay. All right. Now, one thing I just got to warn you guys, there's so many people out there trying to convince you that it's clever to risk more than you look to, I won't call any names, but a friend of mine, he has a program where you risk, I'm just going to round this, you risk 2 points to make 1 point. Now, that can work well for a while, but it's bad math and it's bad science, and it's ultimately going to get you in trouble, cost you a fortune, and maybe take down your account. Okay? Never, ever, ever, please allow yourself to get caught up in any kind of trading thing where you risk more on a trade than you hope to earn. Now, we use aggressive risk management. So sometimes we'll get stopped out on a trade with 3 ticks of profit. Sometimes we'll get stopped out with 4 ticks of profit. And then maybe on the next trade, we get our 10-tick target. Wow, that means we have 17 ticks for the day. That's 170% of our daily production. That's a good thing. See, we have 10 trades to work with every day. Every unused trade rolls forward to the next day. It's like rollover minutes on your cell phone. And when you get a day where you go above your 100% daily goal, not because you were trying to, you got stopped out with 3 ticks, you got stopped out with 4 ticks, then you hit your target. You weren't trying to make 17 ticks, it just happened. Well, that 70% rolls forward. So when you're having a tough day, a rough day, you can't quite hear the music, you're able to use those rollover trades and those rollover percentages to make sure you stay on track. Because as long as you make $100 a day in 10 trades or less, you'll graduate in 24 months as a 20 contract trader, unless you have to hit pause for some reason. Life happens. We take vacations. Sometimes we get sick. Sometimes other business calls. Sometimes we just hit a rough patch and feel we need a little break. Okay, then that's going to push that 24-month timeline out a little farther. But please, whatever you do, don't rush this, okay? You're building a new business. treat it like a business. The more you treat it like a business, the more it will act like a business. The more it acts like a business, the more business-like results you'll get from it. So we want to build our business on a firm foundation, because this could be the very business that will be your legacy, that you'll pass on to your kids, who could pass it on to their kids, all based upon how solid a foundation you put underneath that thing. Okay? That's why we're so insistent that you stay in the simulator until you've put together 10 days in a row where you make $100 in 10 trades or less. Chances are you're not going to hit it the first time out or the second. But once you do, you're going to know in your heart that it's not luck, that it's skill. Now, there is also this random nature of the markets, okay? Every trade, no matter how perfect the setup, has a random outcome. We don't know what the outcome is going to be. That's why we have 10 trades a day. But our definable edge that we apply on every trade, that's what sees us through. That's what makes the difference. So to make $50, I'm risking 100 to make 50. It's bad risk reward, is it not? Yes, that's what I just said, Abe. Don't allow yourself to get caught up in something where you're going to risk 2 points to make 1. We don't do that. We risk 2 to make 2. Now, in some markets, you're only risking 80 to make 100, and in other markets, you're risking 100 to make 100. We use aggressive risk management, okay? What that means is once you have 4 ticks profit in the trade, we take our stop to break even. Wow, that's aggressive, right? We're only looking for 8 ticks in the trade, or 10, depending upon the market. But as soon as we have 4 ticks profit, we take our stop to break even. Now we have no risk on the trade. If it moves 1 more tick in our favor, then we advance our stop 1 more tick. So now not only do we have no risk on the trade, we have also covered our commissions. We continue to lock it in, lock it in, lock it in, lock it in, until we get stopped out with some profit or we hit our target. Okay? So does that clear that up for you, Abe? Okay, good. Guys, last call for questions. I'm such a rambler. I promised myself I was going to keep this thing to 30 minutes, and that's what passion will do. All right, that's it. Final questions. 3, 2, 1. We're done. I got to go. Thank you guys so much. I really enjoyed spending time with you. If there's anything I can do to help you, all you got to do is reach out. Let me know. support@cfrn.net. Have a great evening, guys. See you in the morning in the live trading room, okay?